All right, we are live. It is Thursday. We're looking at earnings. Let me just go ahead and pull up the earnings calendar just so you guys can all see. Today is Thursday, so we've got a Coinbase, Twilio, DraftKings, Applied Materials, Airbnb, Palo Alto, Roku, one of my favorites, Wynn Resorts, HL, and RSG. So we're gonna look at them. Not all of them, but we're going to look at quite a few. So first thing I'm going to do is I'm going to change my grid to 4. I'm going to leave it on the 30-minute for now, and I'm just going to pull up Coinbase over here. We're going to pull up DraftKings. And then we're going to pull up, let's see here, Airbnb, because we like that one. And Roku is a must-have. All right. So Roku's already kind of moving up after hours. Let me also time sync these so that they all kick up to the 30-minute, and we will go from there. So Roku's kind of the leader of the pack as far as anticipatory moves. Also, let me make sure I'm not muted on the recording and social media. And all right, there we go. So we got these 4. These are our kind of our big picks here. So Roku, if we want to just bump that down, I'm just going to turn off this time sync now that we're set. I just want to get a good sense of kind of where volume is going to push these things. Airbnb obviously just dipped and ripped, so we're going to take a look at the 1 minute on both of these. And we're just going to kind of watch and see where the price pushes these. I'm really just interested in watching the time and sales and the candle action here. So I'm not going to be live trading or any of that stuff. I really just want to look at where these are going. And I want to watch for the for those volume, the push pull. So obviously the rule, right? We've got a rule of 12. We typically like to look for 12% moves for these impulses, the initial impulses. So what I can do here is I can just look at this closing price, which is 141.04. And I can just add 12%. Little cheater's trick. Won't tell anyone I told you. So 157.96 is the tentative scalping target for Airbnb. I think it's 157.96. Yeah, okay. So let's go ahead and draw our line there. So if we are scalping, ideally we're using super small positions because we don't want to gamble on these things with large positions. And that should be the initial... the upper level of what we consider to be a safe earnings impulse. So it may go higher, might not even touch it, but most of the time you're going to hit that 12% plus minus. So let's go ahead and look at this guy. Sorry, let me just kick this one up here. What's the official closing price? It's 86.80 on here. 86.80 plus 12%. It's going to be 97.22 on Roku. 97.22. And we're just going to make that a dashed line here. So Airbnb just hit their 12% limit. So we got to be you could also just use this number up here as well. So we got to be very, very careful about looking for entries right here. And that's where a lot of people tend to hurt themselves. I'm going to turn this OHLC off because it's in the way. I just don't like the numbers fluttering around here while we're trying to watch these. So here's where we're going to see a lot of that compression in most cases. It's right around that 12% plus or minus. And I'm looking for DraftKings and Coinbase as well. I'm interested to see where Coinbase goes because of all the catalysts surrounding it, especially with the new administration. This is their first earnings post-election. We have a very crypto-aggressive executive branch and a crypto-conservative Senate and Congress. So we got to be very cautious about kind of monitoring the way this goes. So for right here on Airbnb, one of the cool things that we can do is we could draw fibs. Okay. And a lot of the bearish scalpers right here, let me just, I think I'll just leave it the way it is. What a lot of bearish scalpers are going to do right here is they're going to try to suppress this. And that's just, it's too strong at this point. So I personally won't. But what they're going to do is they're going to try to absorb this into this level here, this first peak. And then they're going to try to drive the price back down at least into this retracement zone down here, 47.19, 44.32. And this is all anticipatory. There's no actual news that I'm aware of. I haven't seen an earnings just yet, but this is all just post-close earnings hype. Okay, so let me just kick this one up here for Coinbase as well. So Coinbase official closing price is turned off because I closed it. So 298.11. So 298.11 plus 12% is 333.88. All right. So, and another really easy way to do that, by the way, is to, I forgot to make that a dashed line. Another easy way to do that is to do a drawing tool with a 12% up, 12% minus. And then that way you've got your levels plotted out. You just got to draw the lines. So for this one, Airbnb, we're kind of looking for a zone into here and then a candle change over to here for a higher break into potentially, 20, maybe like 17, 20%. is usually where we like to see those. So going to keep a very close eye on Airbnb. I think that's probably one of the top runners so far. And then Roku here is coming up on that 12%. Just going to collapse this OHLC. So this one also hit, which means we can draw our fib. So for right now, it's going to be here. And I'm just going to see where the price turns around, because they're going to do the same thing, or they're going to probably attempt to, in that they will probably try to push it down here. So we're just going to go ahead and watch. And we'll see where they go. Right? We don't control any of this stuff, so don't try. If you try to predict, you're going to get yourselves hurt. And I also just want to pull up the comments here on social media as well, just to make sure that everyone's okay. Hopefully nobody's gambling too much. All right. So basically, as soon as this peak happens, I'm going to take this top of the fib here, and I'm going to extend it up to there. And I have a rule of 5 here on these, specifically for earnings. I like to see 5 candles on both sides, not challenging the high that I draw. And that kind of tells me that it's a the proper impulse. All right, so Coinbase has a little bit of, they got about $30 to go. So I don't know if they're going to hit the 12% at this rate. The initial impulse is kind of over. So what we can do is we can just flip it upside down, and we can subtract that 12%. And there's usually a pretty clean, 10+% move in either direction. Now, DraftKings hasn't moved at all, which is interesting because this is post Super Bowl. I'm pretty bearish on them myself. I just don't think it's a good business model. They don't have any real competitive edge right now, and there's a lot of competitors springing up and kind of stealing their thunder. It kind of has been like that for a while. So they're not the best in revenue efficiency. They're not the best in innovation. So I don't like touching this one during earnings. And then same with this one here. I'm just watching to see where this peak is going to be on that. So let me just erase these lines until we have an actual top, just like this one here. So these just keep pushing higher and higher. Now I need 5 candles on both sides. So I'm just going to erase these lines. This is just a brief pullback. It's not a retracement. It's just high consolidation and then continuation. So I'm just looking for a pullback. Ideally, it breaks below these lows here, and then I should have a defined top for this Fibonacci retracement to be valid. Coinbase looks like it's going the other way so far. And of course, again, these are all anticipatory. There's nothing we can really control here other than just letting the price do what it wants to do. So we're just going to hang out. I'm also going to retweet this just to make sure that I have it. All right. And if you guys have any questions in the chat, feel free to ask. Sorry, I forgot that. I always forget the tickers on these. All right. And beyond all that, how's everyone's? How's your trading day? Anybody struggle a lot today, or anybody lose a little more than they were comfortable with? Pan W. All right, we'll take a look at that. Sorry, let me just do one thing really quick. Little housekeeping stuff I got to do. All right, let's look at Pan W. So again, I don't like DraftKings, so we're just going to replace that one with Pan W for now. We're getting a kind of a very similar setup here with Palo Alto and Coinbase. I like this company as a company for speculative purposes. I don't like it as an investment. So we'll go ahead and see where that goes. But I do have the opportunity here to draw a fib again, and this is not a locked-in fib until we see that high and low. And then there's that 12% plus minus directional move. So we saw it very quickly with Airbnb. We saw it very quickly with Roku, which is still pushing up. And then we can look for the retrace, and then that's when we typically see a safer entry. But for right now, we're just seeing hype. It's just FOMO. Volume scalpers are just kind of pushing and pulling the price. Most of this is algos. It's not people. So got to be careful with that. And one other thing that a lot of the bearish scalpers are going to do is they're going to try to time this top, and they're going to hurt themselves. So what they're going to do is they're going to jump into opportunities just like this where the color changes. With earnings specifically, I like to see a candle close below the low of the candle that causes the overextension. So in this case right here, I'd like to see this candle close down here below this low, because that signifies that they were able to pull it back and hold it down there. So it closed higher, which means we're probably not going to see that pullback. But again, we can't guarantee it. But the likelihood of it pushing higher is still there. So I'd like a much more confident close below the low of these ascending highs or ascending higher lows, right? So every single one of these candles here has a higher low. That's a strong impulse. So getting one close up here, which is still higher than the low there, just because you had a little bit of a dip here, that shows weakness, but it's not necessarily it's not a good signal for pullback. Not when there's this high volatility, high violence. All right, so we're about to see all those people panic probably. All right, so Coinbase is pushing back to the upside. It went red to green again, so we'll see what that does. Here's a little bit of a heartbeat. We see a lot of speed, a good mix. Now we need some magnitude in here on this one. So I want it, there we go. We got a good 3K order. So this should be nice and strong to the upside, at least for a little bit. It just needs to sustain that value. There's a 1K order, a couple of those, 500 orders, 750 order. These are going super fast. So you got to be very careful about, getting in and out. And this is where hotkeys help. I'm not really seeing the magnitude here. So there's a lot of absorption. So basically what that means is that there's a lot of volume stepping in, and there's algos that are just kind of holding the price in these wick ranges because there's not enough burn rate. They're not strong enough to break out and release it. So the algos are just going to hold on to these shares, and then they're just going to wait until the price is strong enough in one direction or the other, and then they'll release it and change a direction if it's the other direction. And that's how they make their money. They trap people, and then they compress the price, and then when it releases, they just trade in that direction, and they increase their position. So we can stay out of all that. One thing that I will do, though, is I will hide the moving average here, and I'll just turn on the 30 Bollinger Band with a width of 1. And what that does is it plots a 30 simple moving average with a standard deviation above of 1. And what I've done here is I hide that lower line. That way I get the kind of a threshold of where I can look for safer entries. So I really just want to look for color changes and things like that between these two lines if I'm trading these. And if it's to the downside, obviously I want to flip that upside down. So this is probably going to go H-shape, which means we're probably going to see a lower low below 187 here, just based on the lack of participation here in the time and sales. I'm going to keep an eye on this one here, Coinbase, because this one has pretty good pop potential. It just has to get up. There we go. So we just broke over these wicks. I really like the potential here, so I'm going to kick this down to the 1 minute. And you can see just the push and pull here. So this one should start blasting pretty soon. So this would be a good opportunity to draw out a position based on a break over that candle and based on a low here. Remember, it's okay to be wrong. Like, we don't have to be right all the time. But when we're wrong, we want to cut it. Like, we want to manage those risks as efficiently as possible, and that's what makes us successful. It's not just being right all the time. So in this case, we've got probability stacked in our favor. We've got a good clean position. We got good strong volume. We've broken over a pretty critical threshold on a higher time frame, and the time and sales kind of supports us. So we've got a good mix here. We're starting to speed up again. I would like to see that speed kind of ripping the way it was. There's some good haymakers they're throwing back and forth. So this is about to break in one direction or the other. It's going up or down. We just need that speed. So we're getting back to haymaker territory here. And what I mean by that is when I see large swaths of red, large swaths of green, that's a separation in the distribution. What I really want to see is a good mix of red, green, and white. And that means that they're right on top of each other, they're compressing. And that's when we see the one side just, the rubber band gets stretched and then snap. So that's what I like to see. I like to see a good mix like this. Still a lot of green here, though. I don't really like that so much. We'll have to wait. I do like the order sizes that are coming. We get a couple hundreds here, 400s. That's good. What I really want to see is just a quick run. So we're probably going to see that pretty soon here. Here's a good mix. Like, this is pretty good. Like, if we look down here, like, this is what I like to see. I'll try to stay with it as it scrolls. Not so much this, where it's all one color, whichever color it is. So there's some external fills there. And I'm really focused on Coinbase here, specifically. I am going to move the top up here on Airbnb, because we broke our 5 candles, so we have to kind of start over now. Now, if the next 2 candles plus this candle that's forming can stay below this 163.40 range, then we'll have our fib, and then we can start to look for pullbacks into this area here. So I really just want to focus on the volume here on Coinbase. So Palo Alto, I'm pretty bearish on. This one, Airbnb, I'm kind of bullish on, but we need this to define itself. Coinbase, I'm obviously bullish on. So we'll see where that goes. And again, if I get these wrong, it's okay, because that's where the stop losses come in. And that's it. So it's not really that hard. So this one here, Roku, has formed and finalized its Fibonacci, its impulse. So now we can look for retracements down to this zone and then breakouts to the upside. Anything other than that, I'm not really interested in looking at. Okay, so we got a little bit of a heartbeat here. This is what I like to see, that just general push-pull. And if you look, when that was happening, we got a pretty good consolidation here. It was haymakers and then a good mix. And then now it's starting to speed up. And this kind of condition is like that little, like this, where it does that. That's the heartbeat that we like to see. Now, if you're a more conservative trader, we do have a beautiful color change right here. Positive slope on the moving average to below the upper Bollinger Band. Nice tiny risk right here. Disproportionate take profit up there with uncapped potential. And we're in a good, strong bullish move. I think that's a pretty sweet setup. So we should see this pop pretty soon, in my opinion. But of course, it's important to not really have a bias, and that right there is why. This is volatile. It's violent. I'm bullish overall. It's going to have little pullbacks and things like that. So we'll see where it goes. I just don't think they're ready to release it to the upside just yet. What's up, Lapin? Somebody on Twitter said, "Can you?" I'm not sure what that means. What are we? Can I what? I probably can. I'll try. I'll do my best. What's the investment in 2025 to make millions? The investment in yourself, sir. That's always going to be the answer. Personally, I'm loaded up in domestic tech. I think there's a lot of potential there, and we can speculate the hell out of it. So this one here, obviously, is also this PANW. This Fibonacci is fulfilled, so we can look for, if we're not going to get a straight H-shaped continuation, we may get a pull up to this area and then ultimately back down to a lower low, in my opinion. But we'll see what actually happens. I'm dying. All right, so let me just move this over here. And I just want to also make sure that these position tools are drawn accurately. So this right here is the threshold. So if we get an entry, a break over this level, this would then be the next trade opportunity with a risk-reward ratio, which is greater than 1. So we'll just set it for a 1 to 3 here really quick. Obviously, that's just the initial take profit to lock the bulk of those shares, or the bulk of those profits. We'll go ahead and see what we get here. Yeah, thank you, Latvian. It was a good off-the-cuff answer. All right, so it looks like we got another little heartbeat here. So this would be the entry on Coinbase. Obviously, again, if we're trading earnings, we want to use very small positions. We don't want to put 90% of our portfolio into something during extend hours, just in case you get a sharp move to the downside or something like that, because volume is super unpredictable. That's why our job is not to predict. If you're trying to predict, you are a gambler, and I want to help you so that you don't have to rely on that. Because when we predict, we end up blaming ourselves for something we can't control. That's just extra stress, extra cost. And it's just not good. It doesn't feel good. So price movement is a circumstance. Our wins and losses are consequence. So if you're blaming yourself and the result of the price movement as a consequence, and then your wins and losses you're viewing as a circumstance, you got it backwards. So we can help you with that. This is nice, tight, beautiful compression as well. I like this. Coinbase is going to be nasty when it goes up or down. I don't know which way it's going to go, but if it goes up, we're getting 3 times the 3 times the exposure. If it goes down, we're not. That's all I care about. Do we have any actual earnings on these yet? I thought they released about 5 minutes after close, but I haven't even looked. Let's see, Roku. Their call's at 5. Unfortunately, I'm not going to be around for that, but let's see what they... yeah, they didn't release anything yet that I see. Oh, yeah, they did. 17 minutes ago. All right, let's take a look at their website. Press release. All right, let's take a look here. Oh, no, there's just nothing. All right, let me look at the Edgar database for Roku. That one in Coinbase I'm kind of the most interested in. So let's see what Roku says. They filed an amended... Oh, no, I'm sorry, not amended. They filed their 8K. Let's go ahead and take a look at that. Ooh, that's super tiny text. You know, I'm not very happy about Roku. It says they released their financial results for the quarter, blah, 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 and it's attached as an exhibit 9. Okay, there we go. So we actually got their numbers for once. All right, let's take a look. So for Roku, their net revenue, total net revenue was up $4.1 billion, 18% year over year. That's pretty solid. Platform revenue was up $3.5 billion, 18% year over year, and 15% year over year, excluding political ad spend. That's interesting that they'd specify that. Gross profit was $1.8 billion, up 19% year over year. Streaming households were 89.8 million, a net increase of 9.8 million. Whew. So almost 1/9 of their viewership. That's good. Streaming hours were 127 billion, up 21 point. Okay, so their numbers are right in line with like a roughly 20% increase across the board. That's pretty good. I like that. That one's got a lot of potential, but let's see where the volume goes and what kind of competitive advantages they have as well. Because much like DraftKings, they're good, but they need to separate themselves. They need to protect themselves against other companies. Their ARP is 41.49. Trailing 12-month basis up 4%. So that one kind of struggles a little bit. So maybe they could do some price gouging and get that number back on track. So this, yeah, not the best numbers here. For trailing 12-month ARPU, but it looks like all the other numbers had a pretty significant jump there from a year ago. So 437.9 in total gross profit compared to 512.6 is pretty good. 984 total net revenue compared to 1.2. That's really good. That's 22% jump. So I would say Roku's got some pretty solid earnings here. Now, I didn't look for any, I didn't see any forward guidance or anything, but I feel like that's probably one of the only things that can kind of get in their way as far as a positive reaction. Now, they have the call, so that's where we're going to probably see a lot more volatility. This is a textbook double top, by the way. So I'd really like to see a pull down to here and then a push into that valuation, but Roku has a lot of potential here as long as they don't mess it up. So we'll see where the volume wants to bring it. But my money's on down in the short term. So we've got a nice, beautiful rejection inbound here. So we'll see if that confirms. We got a nice rejection here as well so far on Palo Alto, but this is, again, it's just it's micro moves. So you don't want to put too much faith in that stuff just yet. Now Coinbase is the other one I was interested in. So I really want to look at Coinbase. So let me just go back to the Edgar database here. I got this pulled up on my other screen. Now they filed their annual. So they filed the 8K to announce it, and then they actually filed their 10K, not a 10Q. Let me just read through this really quick. So they are filed. They put a shareholder letter out, 99.1. And it looks like they filed something fancy. All right, let's take a look here. Strong Q4 and full year 24. Full year revenue, 6.6 billion. Net income, 2.6 billion. Adjusted EBITDA of 3.3 billion. That's pretty good. I mean, going into this administration, I think they got a little bit of wiggle room there just in case something happens. Trump administration is moving fast to fulfill its promise of making U.S. the crypto capital of the planet. I think that defeats the purpose of crypto, but we'll see. And globally, leaders are taking notice. And yeah, so a lot of banks are already debasing. A lot of countries are debasing. They kind of started last summer, last fall, to really load in. Obviously, they don't want to just deflate the U.S. economy or other economies to do that, but there are increasing holdings in their positions in their federal treasuries and things. So it's important, and it's not just the U.S. So we really want to keep an eye on that over the next 3 to 5 years. Okay, yeah. So I mean, they got pretty aggressive plans to scale up, I think. Let's just see what this all is here. Okay. It's all just fluff stuff from their investor packet. We don't have to worry too much about that. Okay. Let's see. Is there any forward guidance here? Continue to drive. Okay. All right. So these words I don't like. Regulatory clarity, that's fine. But I don't like seeing them attached to an earnings release. So we'll see where that goes. District Court granted our request. This is last month for interlocutory appeal. Discovery's pause pending the outcome of this browser. Okay, so that's fine. That's a international thing, so we don't have to worry too much about that today. Okay. Yeah, I mean, I feel like they're pretty well in line with what I expected. I just think I think the political catalysts and the other economic catalysts are going to have a much bigger impact than the actual performance of Coinbase. So let's see where it goes. I'm bullish. Is what it is. So, we'll see where it goes. Sorry, guys. Oh, I'm dying. All right. Let me see here. Adam. Which one are you looking at, bud? What do you got? I know Roku here is sideways. Sorry, I didn't see when you wrote that in the chat there. I am interested in hearing what you guys think and what you guys see. I'm just looking at these four. Now we had DraftKings pulled up as well. We kind of saw that going sideways as well, and we swapped it out. Sorry. Sorry, guys. Give me 1 second here. I don't know what's going on. All right, I'm back. Sorry about that. Yeah, so we kind of saw this compress and kind of going sideways, but there's no volume here. And then I'm assuming they announced here, but I'm bearish long-term on DraftKings personally. So we'll kind of see how quickly this falls off. But we do have a technical impulse that we can sustain, and you can see just drawing that, right? And it isolated. You can see that the price kind of fell down, pushed back up here multiple times out of that zone. So they're battering ramming it down, and we haven't pushed into a new high just yet. So a lot of bears are going to try to push this down from this zone. So basically we've got kind of this zone and this zone right here. Okay, I'll just erase this fib here. And what's going to happen is you're going to see bears pushing down. You're going to see bulls pushing up, and that could either form into a wedge or a flag or whatever pattern we like. But either way, regardless, it's going to break out of one of these zones, right? And it might result in a liquidity sweep, one way or another, right? You might get a couple of those. Like you might snap outside, snap back in, snap back outside, snap back in. That might happen. But ultimately, long-term on the higher time frames, I'm bearish on DraftKings. I just don't think they have what it takes to keep up with their competitors, and they're coming for them. Let me just move this over here. I'm just going to snap this to this candle because that was the entry threshold. I just want to make sure the position tool is drawn out a little bit more cleanly. And then for Twilio, let's see, Chris here asked on X, we have a clear impulse here, so we can do the same thing, right? Is this going to go up or down? We don't know, right? All we have to do is identify a high potential opportunity. And I personally don't like Twilio. I think there's a lot of demand for what they offer, but I don't think they're very good at managing their revenue. I feel like they could do better. And if we look at the higher time frames here, they've kind of paid for their mistakes quite a bit, over the years. I mean, this should be doing a lot better, in my opinion. but but they've failed. Like they've dropped the ball. Plus we got this daily gap here to the downside. So we'll have to just see. We'll see where it goes. But I'm personally bearish on it. Therefore, if I were to look for a trade on this one, I would look for a strong push down here as soon as it crosses this threshold here. So right now, for example, we are in the range here. We're above we're above the moving average, but it has a negative slope. So when it crosses back down here and exits this zone, that's probably what I'd use for a trigger and a tight stop loss because it's earnings. Otherwise, this might just fluff around. But in my opinion, it doesn't really belong up here. It belongs down here. So we'll see where it goes. This is just kind of algo volume. There's nothing really strong about this. So it's just the algos kind of feeling each other out so they can consume each other. And then, of course, Airbnb is just kind of doing the same thing. It's got to kind of deflate a little bit. Right now, we're at a relatively shallow pullback. We just failed this low here. We're on our way down to this low. But again, it's an absence of volume until about 5 o'clock. So we'll see where that goes. The only one that's really directional right now is Coinbase. And that's the one I drew my stuff on. So we'll see where it goes. Did anybody not know about the 12% rule before this stream, by the way? About those initial impulses? I'm just curious. I got like 3 DMs about it. Wowza, you're charting. One move of the mouse triggers many lines. Yeah, I have the crosshairs on there. I don't like these. But yeah, so I hide everything but the 61.8, the 50%, and the 38.2, and obviously the 0 and the 100. And that's mostly just for you guys. Like I can pretty much just eyeball these at this point. So here's the end of the technical bullish impulse short term on Coinbase. So this is an opportunity for those bears to try to push it down. I still think it's pretty strong, so I don't see that happening. But we are kind of breaking out of this. If I go back up here to the higher time frame here, you guys can see this is the fib zone, and then we had our 12% run. We kind of established the peak and the base, and then we kind of pulled back into that fib zone, and then we're breaking to the upside. So they're probably going to come back here and test it again, and I believe it's probably going to pop back up. Obviously, there's no reason to blindly commit all my resources to that, but that is statistically what is most likely to happen. So either way, we're in place here. If this was a trade I was actually in, we'd be sitting pretty right now. So it's just a matter of waiting. Now this, for the sake of not making things super complicated here, we have a range right here, and we have a range right here. So anyone who's traded the smart money concepts and all that other stuff, now a lot of that's BS, so don't put a lot of faith in that stuff. But compression releases, supply and demand stuff is, and I'm not going to get too far into the details here, but we're going to have to see a move out of one of these two boxes, basically, just to keep it super simple. And once we do, it should be a nice violent move. So we'll wait and see where that goes. I am going to turn off the Bollinger Bands as well for all these, just so you guys don't have all the extra stuff. I am waiting for Twilio to fall off the face of the earth. Let's take a look at DraftKings. All right, I like it. And then Roku, of course. We want to look at Roku. We don't want to ignore that one. That one, again, I'm looking for a pullback to this zone. Just come back, test $90. $90 or so. All right. So far, everything's kind of reverting a little bit, right? That's the name of the game when you get those violent moves based on nothing. You just get mean reversion all the time. It's always a push and pull. So if you're blindly buying in right now, you're playing a risky biscuits game. If you're buying in with the intention of catching a break out of this zone with a nice tight defined risk with reasonable upside potential, now is not the time to buy because the candle's moving down. So if I were to trade this and I wasn't already in, I'd be looking for a push just over this 301.05 level here. So this trade right here would have officially just stopped out, and we'd be looking for another one. And again, these would be super, super tiny positions. We don't want to put $1 billion into the high risk, fast moving stuff. So I'm just going to get that tool ready. So realistically, I would just pick like one of these. So actually, let's do that. Let's just pick one. All right. So we are in reasonable territory. I'm looking for a push just over that line. And we're seeing some support kind of provide some wicks for us. So far, that can change at any second. Obviously, it's pushing down a little further, and that's okay. It's all part of the game. I'm just going to take a drink of my soda here. A soda pop. So this right here is a good example of why we want to stop out to. We respect those immediately. There's no point in holding it down to here if your stop was up here and then you're trying to figure out what you should do. It doesn't feel good. I know that. So we can always avoid that by respecting our stop in the moment. So it's good that I'm bullish. I have a clear stance on it and I have good reasons for it. But there's no reason for me to still be in this trade if my plan was to trade it to the upside and it's no longer moving to the upside. Otherwise, that negates the purpose of having these super tight risks. All right, here we go. So the volume is changing a little bit here on the time and sales. We got pretty decent mix down here earlier. I was watching, and they kind of spread it out a little bit. So now the good mix is back. We're starting to speed up a little bit. So this is where the kind of the FOMO, the anticipatory scalpers, are trying to jump in. And they're just trying to trade out of this wick. So we are just going to trade top of this level right here. If at all. We're just going to watch it on this one. I don't like trading these. And if you're trying to use like a moving average on stuff like this, you're going to have a hard time as well. Like you could have caught that. That was beautiful. Right? But the slope is negative now and we're below it. So there's no reason to be looking for long trades if that's your strategy. Over here, yes, beautiful strategy. I'll go ahead and draw that out. Actually, I'll just clean up these drawings a little bit. So yeah, this was a beautiful setup here on this guy. It just didn't hit the target. So I'll go ahead and erase that one as well. All right, look at this. This is going to be beautiful. Ooh. In theory, right? Can't tell you what's going to happen or not happen, but I can tell you what it looks like. I am bullish as hell on Coinbase for this earnings after hours, I should say. All right, so let's get this drawing tool. I'm just going to put it right here in case it does break over, and I'm just going to move this into place just so nobody thinks I'm doing any hijinks here. I'm just putting it out there so it's in place, and I'm just going to move this up to the low of the current candle, and then I'm just going to kind of set this level so it's a 1 to 3. And I'm also going to turn off the moving average. So we're just kind of watching and waiting. Now remember, the bears have this beautiful little impulse here, but there's too much weakness in this volume for the bears. So there's a lot of strength in the bullish side. We're seeing a lot of ask side fills as well, even despite the price moving up. So it's kind of interesting to watch. Now, this is interesting what we just saw right there. That little flicker to the downside when the candle opened down here, that usually precedes a pretty strong pop. So I'm just going to focus in really tight on this candle, and we're going to look like we predicted it. But really what we're seeing is an algo shift. So nice little flicker, nice little heartbeat right here. But this is about the time I really want to start paying attention to this. Now, it just depends on which way it releases, but this candle right here just became super important by seeing that. So a gap to the downside between open and close on increasing volume from candle to candle, and then an immediate kind of snap to reversion. So if you guys are watching the recording, you guys can see this, but I'm going to draw a line right here and a line right here, and we're going to watch these two candles very closely. That is interesting. So we're going to zoom in so it looks extra dramatic. Maybe I'll add some music after the fact. Oh, what's up, Porter? How you doing? How's your life? Was it 5 a.m. in Thailand almost? Oof. Early riser, sir. Stressful. That's not fun. Yeah, so these two candles right here, they kind of mark a shift in the algos, which I don't have the order book on this specific account. But if we could see that, you'd see we probably went from equal size walls, so symmetrical walls. We probably shifted to bid side. I'm imagining here. And ironically, is we're seeing the exact opposite in time and sales, which tells me this is, they're just setting up for accumulation. So we'll see what they get there. But one of these two should have been a pretty strong impulse candle. And I think going forward here, we're probably going to see a much more cleaner directional move. So we'll see if that actually happens. But it's always interesting to just kind of watch these little patterns. So we still haven't broken over this level here. This is why we have the threshold up here and not kind of from candle to candle. So we want to see it break over here. A nice clean a break of 301.09 or somewhere around there, just over 301 kind of. So people are going to be looking super close. They're going, oh, it's a wick. Yeah, we got strong impulse to the downside. We got a little pullback, a little shallow pullback. We're going to see a new low. It's going to blast, and it's going to go down to the depths of hell and pop this new low and all that good stuff. And then it's going to get liquidity swept and bought back up. That's there's too much weakness. There's too much weakness here in the bearish volume. So it's a little bit hard to explain. But watching this volume, the time and sales specifically, not the order book, right? Because the order book is just pending orders. The time and sales is what's actually reported to the exchange as far as executed. I haven't seen anything significant from the bears in relation to this price action. Despite seeing this on relatively weak volume, there's really just a lack of participation from the bulls. But when they are there, you guys can see the bulls stepped in right here, had a clean pop. Bull stepped in right here, had a clean push to the upside, immediately stopped this downtrend. The volume spiked right here. This is compression. So this zone right down here tells me there's a lot of potential here to the upside as soon as the bulls decide to step in. So right now they're just kind of holding back. They're letting the bears kind of hand their shares over. They're letting them absorb, right? And that's kind of how you can tell the difference between a legitimate support and continuation. Right, or support or resistance and continuation. So in this case, most of the retail traders are going to be expecting this to shoot down and form a new low, which I'm not saying it won't happen, but the likelihood of that happening is stupidly low, in my opinion. There's all the reason for this to blast to the upside instead. It's just a matter of timing. It's a matter of when the bulls are actually going to start to participate. And that's why we have a threshold right here and not down here. So we'll just zoom in really close and we'll see. So these candles haven't had any of those gaps that I was talking about. But I think we're getting back into that territory. So again, I don't have order book on this specific account, but we'll go ahead and see. Just going to zoom in. We get some increasing volume here from candle to candle, which is great. We really just need the bulls to step in and just push the button, basically. There's a nice little gap there, but it didn't pull down. So that's, I was going to say, we should be going pretty soon here. Now, I don't see a good mix. Like, usually when we see that, there should be a good mix. Like, you see how these are all like green and red mixed, and there's some white in there? Yeah, that's a good mix right there. I like that. Now, after we see the mix, we need to see speed, right? It's like a fire triangle. We need speed, and then we need magnitude. And the magnitude has to come last. It can't come first. Like this 2K fill right here. That's out of place. So that tells me maybe there's a smaller algo that's trying to absorb this. But there's no volume. So it's a fool's algo. So we should start seeing some speed here in a little bit. I think what we're seeing, if I had the order book up, I'd probably be able to confirm it. But I think what we're seeing here is a big algo, which is absorbing the bearish move, and they're just holding off. They're only committing what they need to absorb for accumulation. And then we're seeing a much more aggressive, smaller algo that's trying to push the price down and suppress it, which is being consumed by the large algo. So we're going to watch this little guy get eaten alive, and then the big guy is just going to release the price and go on about his day. So we get to watch it in real time. So here's a good mix so far. Like this is like every other line, maybe 2 lines here and there. There's some speed. Now we need that speed to maintain, and then we need magnitude. So we need to see like 1,000 plus, 2,000, 5,000. Those are the kinds of order sizes that we need. So we still got a pretty decent mix here. It's starting to spread out a little bit. So I think they're still just kind of throwing jabs at each other. It's nothing like this isn't retail. Yeah, so they're trying to chop each other. It's fun to watch. It's like Robot Wars. See, there's just a little swath of absorption right here, just in a sea of much bigger red. Just these little fills here stop the price immediately. There's the buy up right here. You see these chunks of green? That's the buy up. A couple abnormal fills, maybe sacrificing a little bit of range on that to get those abnormal fills, but it's pulling the price right back up. This is clear absorption. So right now he's just depleting this small algo. The small algo is it's a program, so it's not a person, but it's trying to push the price down. It's trying to test the lower volume here. And in doing so, what it's doing is it's pushing the price down in an attempt to artificially inflate the participation. There's a jump, by the way. But that was actually pretty interesting. So I'm going to draw another 2 lines here because this candle and the next should show another pretty significant, in theory, bullish move. But what's happening here is the bearish algo is trying to push the price down. It's trying to artificially inflate the participation so that scalpers will jump in and so that other algos will jump in. But what it's doing is it's committing precious resources into an absorption zone, and the bigger algo is just able to take it all. So this is how we see wicks, like big buy-ups and things like that. So you see a big push to the downside on kind of good volume. It's just immediately given right back. So this is literally just a waiting game, in my opinion. DraftKings is over $100. The valuation, fair value is over 100. What are you basing that on? Their earnings? That's a comment on YouTube. There's going to be a little delay there. Oh, let me move this. Now remember, this isn't an actual it's not an actual trade. It's just the threshold. I just drew the tool ahead of time. So when it breaks over here, that's when we'd look for that trade to set up. And the low is going to be adjusted. The stop loss will be adjusted to the candle. And then the take profit will be adjusted based on that. So let me go ahead and look at this volume real quick, because this is starting to get interesting here pattern-wise. So what we have here, Porter, if you're still here, this is a skelly foot. It's a skeleton foot, sir. So if you look at like an x-ray of a foot, let me just pull that up here. I'm going to violate someone's HIPAA. Let me see here. All right. So if you look at this and then turn it around, right, make it backwards, what you've got is kind of this, right? You got the heel, the toes, and the ball of the foot and all that good stuff. So this is it's one of my favorite unofficial patterns. I just started calling it that one day. Also, let me close all these extra tabs. I got so many tabs open, guys. There we go. All right. Yeah, so we're just kind of in the zone here. What's going on, buddy? The only reason for watching DraftKings, and then dude just hates it and drops it off the review list. We could keep looking at it if you want, but it's you're heading into a Head and Shoulders here. So for this one, the reason I'm not watching it right now is because of what I explained here. There's clear rejection zones, and there's no point in looking at it while it's in distribution. We need the break to happen above or below. So anything in here is just kind of a waste of time. And Coin just has a more potent setup as far as volume and algos go. So I'm more than happy to look at DraftKings, but it seems kind of like a waste of time. I just also don't like the operations of the company. Like, they don't have any competitive advantage. So I promise I'm not trying to crap on your dreams here. I just don't see a point in wasting everyone's time. All right, so we get a good mix here. So again, it's just another potential. Now we need that speed. We're starting to get some sizable orders here, like the 899 right there. We get a couple hundreds. I really want to see this just speed up drastically, and then big orders. So there's some external fills. We're getting a little more speed here. So this would be the entry opportunity right here. So let's just go ahead and adjust that. And then, as always, we want to adjust our minimum take profit, where we want to lock, 75% of the shares, blah, 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 blah. This is a scalp opportunity. We're on the 1 minute time frame. So obviously, if price goes up here, we would lock 75% of the shares, let the remaining 25% run. And then, of course, this just becomes our threshold. So what we can do is we can erase this fib. And it was 301.05. So let me just draw that level. Okay. And I'll just make that yellow. And we have officially stubbed our toe here. So that's good stuff. So yes, this may only be 1.16% or $3.49 per share. But this analysis obviously scales up. So if we were to look at a higher time frame, we'd probably see something a little bit more cleaner. And again, this is a minimum take profit. So the reason we want to lock 75% or more than half our shares is to guarantee ourselves a net profit. Because if we lock 75% of the shares, the remaining 25% not only has to get back to break even, but then 3 times that range before we give those profits back. It's just a math game at that point. So if I bump this up to the 5 minute time frame, you can see a very similar setup here. We've just got a fib pullback, impulse retracement into the fib, and then we're ideally breaking off of this. Now, willing to wager we're right around the moving average as well. It's kind of flat, and that's just because there's been that absorption. So similar to DraftKings, yes, we are in between a distribution gap, but the upside potential here is to slam it through the upper resistance there. And this is how we get big runs. Let me just push this back over here. Sorry. I'm going to just adjust that number back, this level here, right there. So it's a 1 to 3. But this is how we get those massive runs to the upside, but our risk stays super stupidly small at $1.15 or 0.38%. And we can rinse and repeat those a bunch of times. So we can take the higher time frame profits and lower time frame risks, and that's insanely disproportionate as far as risk reward goes. And then, when it comes time to, if this just shoots down, that's okay. It's a 0.38% loss on a small position because we use position sizing and portfolio management. And that's how we become successful traders. So let me just peek back at DraftKings real quick. And we're still just watching paint dry. And let's check Twilio. That should also be on its way back down. Airbnb, same. And Roku. Let's look at Roku. Same. So it looks like the only one we're watching is the one we're watching. That's just how it is sometimes on earnings, unfortunately. Now, in about 4 minutes, there's going to be some earnings calls. And that's when it's time to maybe start focusing on other stuff. But for right now, I don't really see anything substantial. And I do have to jump off of here, actually, in a little bit. Yeah, the candy cane. I love me some candy. All right, so let's zoom in super close, make it super dramatic, up or down. It'll be good for the recording. People can watch it, the shorts, and then they can. People just like fast-moving candles for some reason. I don't. It reminds me of stress and losing a lot of money. But we all have our own our own demons here. But nothing is really super fast-moving right now. As soon as market closes on earnings days, we look for that 12% plus or minus, and that's it until you get those retracements, the mean reversion. And then there's like a 2 to 3 day recovery, unless there's a conference call, at which point we can continue to scalp short term, usually around 5 or sometimes 9 o'clock at night, depends on when the company has their call. So yeah, other than that market close condition where we get those impulses, the best opportunity is either trading the bounce, so the reversion, or trading the longer term multiple day recovery. So there's only 3 ways we can really trade an earnings catalyst. So far, this is the only one that has juice that we had on our list. So for this one, we should see a pretty good shift right at the 5 o'clock mark as well, up or down. Again, we're not going to try to predict stuff, but you can see here that we're increasing in price on less volume, which tells me that the quality of volume should be bullish. And then when the resurgence of volume comes in, when we get that volume back, it should push up pretty aggressively. So we'll see if that happens or if it just kind of falls off. But I'm still bullish as hell on coin, personally. And again, since we have this level here and we've got super tight, tiny risk, we can just trade these all day. I can absorb like 10, 12 losses in a row and still be slamming. Speaking of which, Palantir's kind of pulling up a little bit too. I like it. So again, I just want to ask, has anyone not heard of the 12% rule before this stream? I'm just curious because that's not something a lot of people know about. NVIDIA, I love NVIDIA. I still have my calls. I'll come back to Coinbase. So for NVIDIA, right, you guys will notice it's a very similar setup here. I don't do anything crazy. I grabbed the last of my calls down here on February 3rd. I don't remember exactly where it is, like 10:30 or 11:30 in the morning or something like that. It's gone up pretty significantly, but it's a longer term contract, so it's like 80% or something. It's not like a huge move. And then, of course, we had a shorter term impulse and retrace, and then it bounced right up out of that area. So I'm watching that one in Palantir pretty closely. I'm watching these on a 30-minute, I should say. And it's the same thing. Like, I'm not putting anything new out there. Like, these boxes were drawn a couple days ago. So the concepts, right? It's all about the concept. So let's just look at coin. And this is what makes me a consistent trader. It's not that I win every single trade. I don't care about win rates. It's a bogus metric, and I hate the fact that people put so much stock, for lack of a better word, in them, because that's what hurts people. It's not about being right most of the time. Being a successful trader is about making your losses as small as possible all the time, and then letting your profits breathe appropriately when they want to, and letting the chart tell you when it's time to do stuff. I don't want to get too preachy, but that's something that I hate seeing new traders put the wrong amount of effort into, because I don't have to be right. I sleep good at night regardless, because I follow a mechanical system. So the 12% rule is pretty simple, Hugh. And that just kind of dictates that when there's an earnings catalyst, we typically see a move 12% up or down, that immediate impulse. There might be a little pullback here and there, but if we look at, who is it? Let me pull up the, what was it? Was it DraftKings? It was DraftKings, or no, I'm sorry, Airbnb, right? Airbnb. Their 12% was here. And you see these first 3 candles, or first 2 candles, I guess. They ran and then pulled back. Like, that's that 12% threshold. It's that there's a pretty definable range of about 12% plus or minus for, now these are going to say like 10% or whatever, because I'm moving them down. Sorry. But there's a pretty definable target area for those initial scalps. That's about 12%. So outside of that 12%, you run higher risk if you're trying to scalp in that same direction, unless there's a pullback. So once that 12% is hit, the kind of safe zone, quote unquote, is pretty much over. And then you're left with the reversion, right? So you're retracing that impulse. And then that leads you to, you can either trade the bounce if it's a downward move. Sorry, guys. Apparently I have typhoid or something. You can either trade the bounce, and those are kind of the two short-term trades, or you can trade the longer-term multi-day recovery. So right here, I'm just gonna move this line back over, and we can just watch these over and over and over again. It's not gonna let me do that because it's weird. Sometimes I hate the Weeble. I got to turn the magnet off. That's always my. I'm always so bad at it. There we go. So this one in this case would be a 0.38% loss, or a $1.13 loss. Yeah, exactly. It's just you're watching algos consume each other. So big algo is still in charge. Small algo is trying to impose as well. All I care about is every single time the price kind of breaks over this level, I kind of want to be in it, right? That's where the zone is, and that's all I care about. Now, my variable here is how big or small my loss can be. Sorry. So we've identified a quality level, area high potential. We've seen it break over. We've seen a strong rejection of it. So this is an area of compression release. So we've identified that. It's very clear, very easy to identify. Now, all I need to do is be in it when it goes above there, right? Because my goal is to trade it to the upside, and I don't have to be right. Okay, I just have to be in it when it's going up. And then if it goes down, I want that risk range to be smaller, as small as possible. All right, so right here. So if we were to look for an entry on that right there, we can expand this 0.68%, not that bad. Okay, and I'm just going to use a minimum 1 to 3. Oops, I got to compress that a little bit. I said 1 to 3, not 2. There we go. And it's just a waiting game. All right, thanks, Cummings. Thanks for Cummings. I'll hang out for a little while longer. Just there's not a lot we can really do on this one. Let me take a look here. No, AVGO, I do. Sorry, I think Ethan covered that one. They had earnings earlier. I think that was this morning, right? If I remember correctly. When was their earnings? Oh, no, they haven't coming up. My bad. I'm thinking of a different one. March 6th, they have theirs. I don't like trading AVG on high time frames. I like it on like the 30-minute for just the like clean directional sweeps like this. I like AVGO because it doesn't consolidate much, but it does gap a lot. So you got to be careful with that one. I don't really like it as a company. I know I say that a lot, but I kind of have the right to be fussy about the stocks I trade. I have some strong disagreements with the way that certain businesses are modeled. I want them to make money. Because if you think about it, I'm a business partner. I run my own business. I'm a company. I put my own money at risk, and I need to make revenue as a company. So if I'm going out there to form partnerships with other more established companies so they can commit their time, resources, and PhDs and stuff to growing their own company, I want to make sure it's a quality company and they're efficient. Right? That's the point of investment. You're becoming a business partner. And the trade-off is that, yes, you're giving them money, but they're using billions of dollars in some cases to market, to do research and development, to operate. So you don't have to commit all that stuff. You don't have to go and show up at their office 9 to 5 and grow their company. You're just letting them hold on to some money. So it's kind of a mutually beneficial thing. As long as you pick quality companies and your entries make sense and you manage your risk and say, okay, when this partnership is no longer beneficial for me, I'm cutting it. Right? That's the same thing. So if you're looking for a quick trade, you're probably not going to find it at 5 o'clock on a Thursday, unless you want to trade some low float garbage. Now, for quick trades, you also don't want to stay on the 1 minute time frame. You want to do multi time frame analysis. You want to do a little bit of due diligence and things like that. So As far as AVGO goes, that's pretty directional. So if we kick this to like the 15-minute or the 5-minute, turn off those extended hours, there's some pretty easy ways we can trade this. And it doesn't have to be super complicated. If we want to use downstream channels, for example, and just kick these to like a setting of 5, right? Oop, not 55. We can very easily plot out those isolated highs and lows, right? We just got to make sure they're kind of far apart. There we go. I'll just turn this back off. So if my goal here is to identify zones where I can trade, and I see these, now obviously this zone down here, like this one specifically didn't form until right here. Okay, so this became a zone there, which means I can only really use this for backtesting purposes on these 3 wicks right here. Does that make sense? Yeah, AVGO is directional as hell. I didn't look at the options chain. So you always want to look at the option chain, make sure there's good volume. I don't like the volume on these. Let's see what else we got here. So I like to go like 42, 43 days out. There's not a whole lot here. I don't really like the volume on these. You want something that you can get filled. You want something liquid. So it's all right. But I would probably just stick with short-term pops and drops. So if, for example, I look at this contract right here, and I bump it down to maybe the 5-minute time frame, is this something I can get in and out of within maybe a couple hours with a profit? I don't like it. There's too much stagnation here. And this is the highest volume contract for the day, or for the 2 days, I guess. So this is, I don't really like the option chain on this one, personally. Just want to come back here as well. Does that make sense? The average volume, that's gonna change based on the stock and the day. Like different contracts are just gonna have different ballparks, and you really just have to kind of look relative to the ones around it. So you can sort, like if you have a broker that allows you to export these, you can probably sort it by volume, or you can just kind of limit the range that you see, like 10 plus and minus, and then I can only see 5 up, 5 down. Then you can just pick the one with the highest volume here. So in this case right now, it would be the 1-day $300 call. And then maybe you look for the second one, which is down here, the 6K or the 91K right here. So calls are a little bit more weighted on this one today to the upside above the strike. So that's where we want the price to go. But it really just kind of depends. I mean, this grid of numbers here is going to be completely different depending on what stock I'm looking at and the day that I'm looking at it. So unfortunately, there's no best when it comes to that or really anything in the market. Can we take a look at BABA? Yeah, absolutely. So this is the cool part, right? We have the setup and we're not taking action between these 2 zones. We're letting the chart tell us what to do. So we can do other stuff. We don't want to be a slave to the market. So yeah, let's look at BABA. Ideally, you'd set like an alarm. All right, so right here, we've got a pretty easy zone of contention that's kind of sprung up a few times, right? So we've got bearish potential here pretty easily, just right off the bat. If, however, this or a future one breaks, then we've got a pretty good little fair value gap right here. Let me just make that blue. And again, that's another opportunity for bulls to push up, bears to push down to a new low, which would break below that. I don't really like Alibaba as a service. They're just not doing so hot. So I don't personally believe it belongs up here. I'm expecting it to go down to like the 40s, 50s or lower. That's kind of where I believe it belongs based on their numbers. But if it's going up, we can always trade it on the way up. I also think a lot of Chinese companies are going to struggle over the next 10 years pretty significantly because they have a declining birth rate, which means that their skilled labor and all that good stuff is going to diminish in terms of potency. And there's obviously like geopolitical obstacles that are going to happen within the next decade or so, or within the next half decade, sorry, that are going to kind of exacerbate some of that stuff. So as far as their e-commerce, their government and things like that, there's going to be some obstacles for them. So I think a lot of US companies are shifting away from Chinese. And that's also going to kind of exacerbate that. So is going to be a little messy. So personally, I'd be looking for puts on a lot of Chinese companies. Tesla, yeah, we can look at Tesla. What is there something specific about Tesla after hours that appeals to you? I don't like this. We already had our Tesla already kind of ran, buddy. That's not to say it can't keep going, but the opportunity here was right in this area. I think you and I might have been looking at it, or maybe it was me and SKZ. Oh no, I think it was before you guys. It was a while ago. But either way, at what level can we buy calls? You could at any point, but you really I can't tell you. There's no my answer is going to differ from your answer, which is going to differ from Porter's answer, which is going to differ for Austin or someone else that's new to trading. What I can tell you is that your system that you follow as consistently as possible should tell you where your risk is. It shouldn't tell you which direction it's going to go. It should tell you where you have the least risk and the best potential. So in this case, we clearly have a downtrend. You could just zoom out, eyeball it, it's going down so far, right? Now the anticipation is that it goes up somewhere at some point, right? Could be this candle, could be this candle. These two are both going up, but it could have been this one. It could have been this one, could have been this one, could be all the way down here. We don't know that, okay? So there's no point in trying to jump in front of it and guess. Instead, what we can do is we can look for a system that makes sense. We could say, okay, let's take something that kind of indicates that there's some reason we should be in the trade and some way to manage our risk and know exactly where to cut. Okay, so if I were to say, okay, I identified this as a red candle, and I say, okay, the price went as low as this level. Therefore, when the price comes back up and the bulls are in control again, which is the direction I want it to go, then I can start looking for an entry, right? But if it's just red candle, red candle, red candle all the way down, there's no reason for me to jump in. Does that make sense? If I want it to go to the upside, I want to be in it when it's going up, not down. But most people try to pick the bottom, right? They try to snipe it. They try to time it so they can feel good. Ultimately, that doesn't pay the bills. It usually costs you a lot of money. So instead, if this is our approach and we say, okay, we're above that threshold now, right? We broke above it right here. We've got an inside candle. We've also got a break. So we've got a little bit of confluence there. We got increasing volume. All the good stuff is lining up. Whatever our strategy is, doesn't matter at the end of the day. We know exactly where our cut point is, which is the most important part of any strategy, because this tells us what our risk range is. So 5.96%. Therefore, we can seek at least a 12% take profit, and that would be a very easy trade setup, in my opinion. Does that mean it's going to hit the level? Absolutely not. There's no way to know that. Future me knows that, but present me has no way of knowing that. Therefore, I can't blame myself for the outcome. I know exactly what I'm going to do if it hits this level or if it hits this level, but there's no guarantee it's going to hit one or the other. It's always a 50-50. That's why win rates and all that good stuff do not matter. I hate seeing that when people are talking to new traders. Win rates are complete garbage. I'm absolutely on recording saying this, and I don't care. It's going to make trading quote unquote gurus upset on other YouTube channels. I don't care. I know you're lying. You know you're lying. There's just no reason to put stock in a false metric. It's not about less losses. You're never going to mitigate the ability to lose. What you can do is you can increase the efficiency of your losses, because that's what takes people out of the market. It's not the wins. So if you're focused on increasing your wins and making a better win rate and stuff, that's great. It'll help you feel better, but you have no way of controlling that. Price is absolutely going to go up or down. So my plan isn't to say this is going to happen or this is going to happen. My plan is to say this is what I'll do if this happens, or this is what I'll do if that happens. And then all I have to do is follow that. That's a lot easier, and it helps me sleep better. But that's where people, they tend to struggle. They tend to separate their willingness to be successful from their willingness to obey their ego, if that makes sense. And I'm not talking about arrogance or anything like that. I'm just saying, like, that's where people hurt themselves because they have to be right. And that's where they compromise on things like stop losses and use aggressive position sizes. Oh, what's up, Alatho? This is being streamed on YouTube, Twitch, and X. And I'll put the Discord link in here as well if you want. Perfectly free to join. You just got to go to WAP and claim a role. That's all. And that's just to keep things tidy for everybody. I also don't know what makes the stock go higher or low suddenly by like $4 or $5. Is it due? That's, yeah. I mean, that could be a catalyst. It could be any number of things. It could be a momentum algo or a zone breaking and a bunch of volume scalpers, algos specifically. It could be any number of things. You don't know that's going to happen. And anyone who says they did or do is confirmation bias. They're lying to themselves, probably. They're probably doing it with the best intent, but these algos that you're competing against don't care where you draw your lines. They don't respect technical analysis patterns more often than not. We teach that stuff so that you can identify where that stuff stops making sense, and to stop using it as a tool to try to predict stuff, and more so as a tool to identify where your risk is unhealthy. I can teach you a million strategies, and I can teach you all the technical stuff, and I can teach you, like how all the algos work, but it's all just going to boil back to making those losses as small as possible. And that's why we offer coaching and, and indicators that all have, stop losses built in and things like that. So if you want a very simple strategy, slap that Bollinger Band on. We'll change this back to 20. Right? Hide the lower band. We don't need it. Positive slope on the moving average. Below the 1 standard deviation Bollinger Band upper limit. Color change. That gives you defined entry, defined risk. And then you just take a disproportionate take profit. Do it 100 times. Collect the data. See if it makes sense. See if it works out for you. If not, move on to the next. But while you're collecting that data, I want you to study yourself. Why wouldn't you be able to follow that step? Like, what specifically caused you to deviate from the strategy? And that's where the good stuff is. It's not, I can push buttons. I can, I can identify this pattern, that pattern, that pattern. It's what stops you from pushing the button you were supposed to push when it's time to push that button. Because that's what's going to mess you up more than anything I teach you. Yeah, NVIDIA. I like NVIDIA. We're kind of ticker hopping. I like NVIDIA on the 30-minute. Like I said, we're down here. I bought the last of my calls down here using the strategy that I taught the lifetimers, and we're just kind of in it, right? We got another technical impulse here that we can use to draw a fib. We can justify it, and it came down here, held. I drew this box back here, and it just happens to have worked out. It could have just as easily fallen back down. It doesn't matter. I don't need to be right all the time to feel good. This thing loves compressing and releasing. We got a little wedge here. We had a little wedge here. We got a little wedge here, right? It loves it. So I'm just going to trade in those directions as long as they make sense. So I'm personally shooting 140 plus. I would love it if it shot up to like 160, but I don't think that's going to happen until next earnings, which I think is next week. Or 26, I think. Not next week. 13 more days. But I like it. I like NVIDIA. NVIDIA and Palantir are my two close watches. When is the next consolidation level? We're at it right now. It depends on what time frame you're looking at. So if you kick it up to the 30-minute, this is that's your compression right there. We're right here. It's just a matter of which way it's going to go. Now, if you go up to like the weekly, for example, that's kind of in this area too, right? That's where you get a lot of these wicks. That's where you get a lot of pressure from both directions. That's where you get the good, strong compression and volume. Historically, it acted as a resistance. Like, we're in a good area. Now, a lot of the institutional traders are probably going to accumulate plus and minus of that so that they can trade the earnings release. But my contracts that I have will kind of be, they'll be pretty decayed at that point. So I'm going to probably lock most of my profits this week on that. And then I'll just re-enter for the earning stuff in a much smaller position to protect myself, because position management is much more important than any specific entry or exit. Yeah, break up or down. Highly, highly likely. It's domestic tech. It's big tech. It's one of the Magnificent Seven. You know, like Apple, Microsoft, IBM, NVIDIA, Tesla now. So after the earnings, we can buy puts. We don't know that. It could sell off for earnings. We don't have any way to know that ahead of time. If it sells off and you're buying puts, or if it pushes up really high and the price of those puts increases because other people are buying them, that's not necessarily a clean answer on that. Are you specifically bearish on it? Or are you just trying to speculate a naked contract? Okay, so let me answer my own question here. Is there any real need to trade a naked contract as opposed to using something like a put to hedge? Right? If we view naked contracts for what they're supposed to be used for and what they were designed to be used for, in that they're instruments for acquiring or offloading shares, speculating the premium exclusively around high volatility catalysts seems a little bit dangerous to me. Instead, it makes more sense to either buy or sell those puts, either for yourself or for someone else, so that you can hedge against that volatility. And then if the price sells off, you make money on the put, but you also have your shares and then can trade the recovery by averaging down if you want. All right, so there we go. So this one just popped down as well. Boom, boom, boom. So again, no stress. There's no skin off my balls for this. That's fine. It's 0.68%. I love it. We can zoom in and make it super dramatic if it helps you guys. But this is like, it's such a small risk range. So if we're going to trade high volatility catalysts like this, we really want those risk range to be super tiny. And all I've done is I've just taken this candle here and this candle here. And when they break over this yellow line, I just put my stop loss right below the low of that candle. Let's look at SoundHound. And I'll do that as many times as it takes. As long as it keeps breaking over that level, I'm going to keep looking. I like SoundHound. So this is I was using this for fair value gap education here. That's why you're going to see all this stuff here. Let me see if I can remember what time zone that was. I think it was probably a 30-minute. Sorry, it was a while ago. There we go. All right. So this one right here, I think we kind of established this zone, and we were looking for rejections to the upside or downside. So in this case, most likely the downside. So right here. Right. So again, just areas of compression and release. So we saw a push in, we got the compression. We used some various mechanical points of analysis to get that analysis, to get that zone established. And then we saw a strong rejection out of it. And then we just kick it up higher time frames. And we're just kind of like, obviously here's a zone, right? Doesn't require any masterful analysis. Price just stopped pushing around this area, right? And then we've got a distribution gap. So we've got compression release zone here, compression release zone here. This is breathing room. This is what we can look to trade with minimal risk, right? Again, it's all about how small you can make those losses. Everyone keeps trying to bring my Palantir down, man. Everyone hates my Palantir. I'm still bullish as hell on Palantir. I don't think a lot of the bearish thesis here really fits. I mean, unless you're looking super short term, in which case you're looking for a pullback, not a reversal. But I've seen some really hardcore bearish outlooks on Palantir lately. Like people saying it's going to go to like $70 and things like. It just doesn't make sense, like valuation wise. This company should be so much higher. I just don't get it. That's not true. There's a belief that something is due for correction, or that something has to happen. That is absolutely not true in this kind of market. That's I'm not trying to like pick on you or anything. I'm just saying that's a That's a mindset that gets people hurt. That's a narrative. No, I'm not saying it won't happen. I'm just saying that there's no need for me to take action until it starts happening, right? So right now it's bullish. There's no reason for this to magically fall off the face of the earth. All I need to do, right, is regardless of which way I have a bias, if it's not going in the direction that I want it to go, I shouldn't be in it, right? It's a very simple concept, but it's very hard to implement. And that's where people kind of get stressed. Okay. And that's why we teach mechanical strategies. So that way you don't have to, oh, look at that compression. That's nice. So if this can get some volume here, by the way, I'll draw 2 lines here. This is another one of those areas where we've got the 2 line. See this like ebb and volume right here and this ebb and volume. I really like those areas. So this, I'll draw another line right here as well. Sorry, keep going back. But yeah, like you can't assume that a big company like Palantir with all that catalyst backing and all the future potential that it has is just going to fall off because it's quote unquote owed or due for a pullback. The best bet is just to wait until it starts happening, if that's your thesis, right? Otherwise, we're just jumping in front of a train that has no intention of slowing down, and it's going to require some track to slow down. So if it's starting to slow down now, that's great. But that's still not the time to jump in front of it, right? If it's going to be a big move, like everyone on YouTube likes to claim, it'll go pretty far, and you'll still have a lot of time to get in. So you don't need to necessarily try to snipe the top. Sorry, I got a request here on X. I'm sorry about that, Chris. I just saw it. We're looking for Tem. So Tempest AI. I think Austin and Shai talk about this one pretty frequently. I think I like this one. I like it a lot. I'm not sure where Shai or Austin land on it, but I like it. And it has a lot of volatility. So it's pretty good. But I think that I think if I remember correctly, yeah, this it's pretty heavily diluted for where it's at. I think they may do an offering at some point if they need it. I haven't looked at their financials in a while. But they have almost a 3-to-1 restricted share ratio, and that's not good, especially when you get a massive surge in price back over shakeout. I would hate to see them like drop an offering near an earnings catalyst, for example, especially a negative estimate. So I would just be careful personally. We'll have to just kind of see where it goes, but I like this one long term. They just have to they have to establish a little bit. So I'm just going to keep popping back here to coin real quick. And again, my goal for this is very simple. I'm just looking for a pop over this yellow line, and then the stop loss goes under that candle, whatever candle breaks out. I'll just do that a bunch, just rinse and repeat it. For Palantir, 117 is still low. In my opinion, yeah. This could easily go up to like 300 or higher within the next couple of years. Very easily. Sorry. Right? Like stocks don't typically do this over this period of time without much, much more potential. Like this is exponential potential. Exponential potential. Yeah. Big word. There's so much upside on this in terms of the industry and its agreements with like governments and things like that. I don't personally see this stopping anytime soon. You can absolutely expect pullbacks. Absolutely. But it's never guaranteed. Do you know what happens when you see a massive move in price without a pullback? It's called a displacement. You want to, like this right here, for example. This is a displacement. Price was down here, kind of in this range. You got this. Well, here's another one right here. It's probably a better example. Like this was the range that the price was in, and then it displaced completely. No pullback. And it hasn't come back since. And I'm willing to bet if we look further down here, you probably see another one. That's a displacement. So no, the stock is never absolutely guaranteed to have a pullback. And that's where, again, it's something you're told. I get that. Like YouTube has a lot of well-intended education, but it's not always accurate. And when I was learning this stuff, I misunderstood a lot of stuff just because I didn't learn it the right way. And more importantly, I didn't have anyone to correct me. So, and I operated under a certain set of assumptions that I was given. And ultimately, it just got in the way. And I wasted a lot of time and money trying to figure out why I wasn't getting good at this stuff and why I couldn't figure it out and why things always went against me. And I really took a look at what was not working and understood it pretty brutally that I was blaming myself for things that I just couldn't control and didn't understand. So why did these displacements occur? It's just supply and demand. It doesn't just happen in the stock market. Think of it like gas prices, right? You get a major catalyst, gas prices shoot up, right? They might come back down a little bit. It happened in the 90s, right? We get a little massive shift in gas prices. It comes back a little bit, but it's never near where it was. Now that's obviously a much more complicated scenario because there's other factors, but but when it comes to like stock prices, it's just supply and demand. Like we're seeing this right here, for example. Let me find another example of a displacement here. So a lot of times you're going to get kind of this push-pull, and it's going to kind of exist in a range, and then it'll break out of the range and form kind of another range. And that's where we get support and resistance levels where they oscillate. But as you've seen with the other examples there, that's not always the case. Let me just go up to the weekly time frame. It's usually pretty prominent in higher time frames. Like this right here, this may very well just be displaced permanently. We don't know that. Right? Crypto has a very solid future, in my opinion. So this could just as easily, right? This could just as easily pop all the way up to here, $542 overnight. There's no way we can predict that. At which point, you'll probably get a little pullback, establish a new range. But this gap here, this may never be filled. And that's something a lot of new traders just don't internalize. They don't accept it because they believe that things are due for a pullback when that's not the case. So I get the sentiment that gaps always fill, but that is not accurate at all. So when price moves rapidly, it's not an imbalance between the number of buyers and the number of sellers, because in order to buy and sell, you kind of need both sides. And that's another misunderstanding that most traders have. When price moves, it's because one side has an advantage over the bid-ask spread. And that's how the exchange works. And that's different order types have different leverages. Because remember, limit orders get filled at or other than on the opposite side of the order, and market orders get filled at the best available price. So if you have two orders that get matched, one's a limit order, one's a market order, one's going to have an advantage. Okay, because the other order is going to have to kind of reach out and meet it there. And, that's ultimately what drives price up or down. And when you have someone compromise, for example, or if the bid-ask spread is wide, then you get those more drastic moves. Like this right here, this red, see this red bold color here? That's an outside fill. That means it was filled outside the bid-ask spread. So it's got a little more pull. Here's another one for 1 unit. This is 50, that's 1. And that bid-ask spread widens because the volume is falling off. It's after hours. So when you see a series of those big orders like this right here, this looks scary, but it's really not. It's just that the bearish algo just kind of doing whatever it wants to try to do to push the price down. And you can see here comes the buy up. Like the bullish algo is just absorbing it. He's accumulating shares here and here just for the buy up and then the ultimate release to the upside, in my opinion. Anyway, whoops. That's what I see forming. It doesn't mean that's a guarantee, but that's what I see forming. So all I have to do is look for a bullish justification when I want to get in and it's safe to do so, and manage my risk in case it doesn't. That's my only job. I don't have to try to say, oh, it's going to, $417 at, by March 3rd. That's too much. There's too much voodoo in the mix. And I hate seeing people try to be Nostradamus. And this is just, they always say that technical analysis is zodiacs for dudes. It kind of is. Why on Friday the day is always red? That's not true. Fridays get green. Are you talking about this specific ticker or SPY? And this is an opportunity where we just collect the data for ourselves. Oh, that's not true. We've had super green Fridays. Green Fridays happen all the time. But that's what I'm saying, though. Like, we have these things that we're told. We see things on YouTube. We see things on live streams. We see things on podcasts. We read things in books. It's up to us to put it to scrutiny. That's why I say, anything I teach you guys, pick it apart. I don't care. I want you to challenge it. I want you to scrutinize it. I want to see if it makes sense to you, because if it doesn't, I don't want you to try to use it. It doesn't do you any benefit to just blindly trust me or anybody else. So in order to do that, all I need is the daily time frame and a calendar, which is on my other screen. And I could look at February 7th, for example. February 7th here, just on this one ticker, was green. So that immediately disputes the "it's always red" kind of insight, right? If we look at SPY on the daily time frame on February 7th, it was red. Okay, so that's one. Okay, one out of always. So let's look at January 31st, 24th, 17th, 10th, and the 3rd. We'll see how much it tends to be red. So 31st. All right, 24th, 17th, I said. And what was the other one? The 10th, right? Okay, so one bullish day, 1, 2, 3, 4 bearish days, right? Might seem like a good trend at this point. So yes, it's pretty safe with these 6 points of data or 5 points of data to say, okay, SPY is always red on Fridays, right? Let's scale it up. Let's do 10. Let's do 100. Let's do 200. Let's collect the data. So now we got January 3rd. Oh, that's not looking good. So let's see what else we got here. So December 27th, 20th, 13th, 6th. 27th, 20th, 13th, and 6th. Okay, so now we've got 1 bullish day, 2 bullish days. That's a big one. 3 bullish days, 4 bullish days. Okay, so 4 bullish days out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 40% of the time it looks like it's green across these 10 days that we tested. So maybe 60% of the time it might be bearish, 40% of the time it's bullish, but we only still have 10 points of data. Right? So let's scale that up. Let's look at all 100. You know what I'm saying? Like, this is why it's important to test the theories that we have. You have to collect data, and it has to be more than once or twice or 10 times. Because all we're doing is depriving ourselves of objective truth when it comes to stuff. Let me take a look here. And again, I'm not picking on you. I'm not trying to like crap on your dreams or anything. I don't want to see you hurt yourself based on what someone else told you to believe. My job is to help you guys be confident and to manage your risks. So. All right. So with all that said, though, I'm going to hop off here pretty soon. SPY is more likely to be red on Monday and green on Friday historically. Let's collect that data. Correlation versus causation. I don't, unless you're trying to justify the red and greenness, that wouldn't really apply. I think it'd be more like just confirmation bias. Palantir volume is bullish for calls. Well, it's going to be because it's pushing up, right? If you look at the higher time frames here, calls, right? But it doesn't matter. All we need to do, right? And this is where like it has to be a mindset shift. You have to absorb the role of someone that doesn't want to lose money rather than someone that's trying to make money. Okay, the money will make itself. You just have to develop a process that doesn't bleed you out, right? So if my thesis is that I want this to go up, okay, I need an opportunity for me to find minimal risk. Okay, so if I'm buying after a big green candle, and I currently have a green candle with a wick on both sides and decreasing volume, and I don't really have anything other than just these candles here, it's going to be very difficult for me to explain that to myself, right? So I can't really be confident in that. Instead, what I can do is I can layer in some other form of analysis, and I can say, okay, well, here I've got a defined risk range. I've got a higher high and I've got a higher low, sort of, right? In terms of these two. But that's really all I have to go on. So rather than trying to trade that overall trend and being like, yes, I'm going to, this is where I'll put my risk and this is where I'll put my profit, I can shrink that down into something that makes more sense. So if I say, okay, I want the trend to go up. I want to be in it when it's going up. I believe it should be going up. I'm able to justify it going up. Now I need to figure out where I want my risk to stop. Okay. So if my goal is to trade this to the upside and I'm on a lower time frame, I can do something like a color change and a disproportionate take profit. Right? Because my justification here is no longer just buy it and hope it goes up. It should go up if it breaks over this, and I don't want to be in it if it breaks below this. So all I have to do is set the trap and wait, and then boom, I'm a professional risk manager. Right? That's what we need to be doing. Not I'm going to buy it here and it's going to shoot up. So that's where people just hurt themselves. And in this case, right here, even right, we're bullish, or I'm bullish. It's just not ready to go up. The price is falling off. I've only looked at these two because that's all the chart told me to look at. I'm not down here trying to, buy up this candle, and I'm not trying to pick the bottom and, oh, it's a wick, it's getting bought up right now. That doesn't make sense. I don't have a way to justify that. What I've got is a 3-bar play here that's spread out from a higher time frame. So let's go ahead and just call that out. Maybe 4 bars. That should be bullish, but you guys get the idea, right? Like each of these has lower highs. There's no reason for me to try to jump in right now until that changes. So till price breaks over this yellow line, I don't want to be in it to the upside unless another setup that I can justify forms down here. And then I'm going to take super minimal risk. All right. With that said, though, I'm going to end this recording just because the price isn't moving where we need it to. We are in obviously a potential bounce zone, but it could take another hour. I got to get off of here. I'll hang out in the Discord for a little bit here, but I'm going to end the recording to spare the time for the folks that are watching this after the fact. So thank you for watching, and I'll be in the Discord.